Ladies and gentlemen, welcome to our session on investing in tech. How will venture capital drive the next wave of innovation and entrepreneurship? I'm Nadira, Tudor, and it's a pleasure for me to be your moderator for this session. I've got an amazing panel today. So, what does the future hold for venture capitalist investment? Let me dive straight in and introduce you to my panel. My first guest on my left is Jack Selby, Managing Director, Thiel Capital from the US. A real privilege to have you on the panel. My second guest, also to my left, is Rajeev Misra, CEO, SoftBank Investment Advisors. Great to have you on our panel. And virtually, as you can see on the screen, my third guest is Patrick Zhong, founding managing partner, M31 Capital, all the way from China. And my fourth panel member is Tsai, CEO, 500 startups in the US. Welcome to all of you. It's a real privilege to have you here. Jack, I'd like to start with you first, if you don't mind. Are VCs structuring their investments and portfolios differently, given the new economic realities?
So from our perspective, the short answer is no. So it's certainly been a very different environment over the last 12 months. For us, we've been playing more defense than offense, certainly. We are of the opinion that it's very difficult to conduct due diligence over Zoom. We find it's a very personal business. You need to be in person. So while we've changed the way that we do our business, we have not changed the way structurally how we're conducting.
Yeah, and Rajeev, how, in your opinion, has the VC community approached the events of 2020? It's been unprecedented. Which sectors can you see benefiting in the future and why?
I think our whole hypothesis and the vision we had when we started 4 years ago with the Vision Fund, that AI and technology is going to disrupt every aspect of this planet, has accelerated dramatically in the past 12 months. What would have taken 4 years to achieve in the disruption happened in 12 months. So, in fact, we are even more encouraged to invest in this environment. The sectors are many because, as I said, the disruption has accelerated dramatically, whether it's e-commerce, whether it's online education, whether it's all the genetic engineering using AI and data. But online education is a great example which democratizes the world. Just one of our companies, Zoya Bank in China, which are 30 million online students, now has 140 million online students.
Which is incredible, isn't it? And we've all had experience of that. So, you know, it's obviously growing, that sector. It's essential.
It's essential, and it's not there's no going back. A lot of this change that happened in the last 12 months is permanent, whether you're buying your shoe or ordering your food or getting medicine from a pharmacy or just finding cures for new diseases or using genetic engineering for the next 3-4 years. It's going to be all made possible by a lot of venture capitalists who put money into these early stage companies.
Patrick, I'm going to bring you in now. Technology appears to be the driving force behind innovation, entrepreneurship, global growth. What's China's role in VC compared with other leading nations?
Nadira, in China, and for the last 12 months, we're able to actually meet a lot of entrepreneurs. We met about 600 companies. And I think my take, because I spent my first 10 years investing in the US, in US tech and growth companies, and the next 10 years investing in China's technology companies. And it's pretty interesting, and a lot of things I'm seeing right now reminds me of what happened in 1990s in the US. And a lot of technology companies, and with true innovation, really driving the changes of industries across board. And we're able to actually connecting dots globally, looking at the technology, compared it to the counterparts in the US and Europe, and to see, are they actually really representing state-of-art technologies or not? And actually, the answer has been pretty positive across sectors, and from immunotherapy, gene therapy, to SaaS, software services, and from digital to consumer. And we're seeing really exciting opportunities. And by the way, and for the last year, And in China, things actually stay pretty normal. So the technologies companies, basically, they're running nonstop. They're not using virtual meetings. We're able to travel quite a lot within the country. So I think so far, my take is we're seeing something really robust going on here. And by the way, we're looking at the data, and I think that for the next 5 years, and we're talking about global GDP growth, China probably will contribute about 27.7% of the global GDP growth. So this is where it's no longer about just cheap labor, it's about innovations.
Yeah, and if we go to you, Rajeev, how do you create value for tech-enabled companies that you invest in beyond the point of investment?
Given we make large, we are more mid-stage growth investors, not early stage, and we write larger investment tickets. And we have 105 portfolio companies over the last 4 years, and of the 105, in 100 of them, we are the largest shareholder. So we take a lot more supportive role. We will never invest in a company that we have to get too involved with, because that's the entrepreneur and the founder's job. But with 11 offices around the world, and SoftBank being a 150 billion market cap company with presence in telecom and a lot of presence in China, in Japan, and so on, we help those companies with different forms of raising capital, with going global, how to enter Japan, how to go into China. If you're a great business in the US, how do you translate to a new geography? And in difficult times, like the first half of last year, we gave them comfort that we have the capital if they need capital over the next 2 years, which if you have a limited fund size, you cannot do that. So we help in a lot of ways.
It's really good to hear the different perspectives here. Patrick, again, I'm going to ask you, how does China base its decisions on where it's investing, where it's facilitating? And what other lessons do you think other nations can take based on your experience on the Chinese model, which by any measures has stimulated massive growth? What's your advice, effectively?
I've been to FII a few times in the past since its inception. I know the regulators are also participating in the conference. And I think strategically, from the government perspective, I think they did a lot. And with a serious plan, China is actually doing its 14th to 5th years plan. And innovations really just are considered as priorities. And for the government actually to deploy their capital. But more importantly, I think at grassroots level, and we're getting a lot of very accomplished and talents returning to China and working in different fields, again, from AI and to pharmaceutical, and doing some of the really amazing innovations. And also what I'm seeing is really, in China, every 5 years is a new generation. I had the luxury in spending time with some of the most well-known entrepreneurs in China today, and 10, 20 years ago. But today, the entrepreneurs are so different. They live in China, but they really listen to the same music everybody listens to in Los Angeles, in Riyadh, and in London. And they read the same thing. And so basically, the information travels pretty fast, and they have no problem really getting ahead of the curve when they're really kind of working on the innovative projects. I think we're talking about the whole ecosystem. It's not just a person or a company's effort. So I think the takeaway is, and this is the whole ecosystem, and you have to really embrace innovations. I think this is very important for everyone to consider.
Christine, I'm going to bring you in now. Patrick says talk about embracing innovations. What types of startups are able to find success during the pandemic and beyond, and which haven't?
I think one of the things that we all probably acknowledge with the pandemic is that we've seen great shifts in different industries. Some have really seen tailwinds from COVID and are doing phenomenally well, and that's reflected in portfolio companies of ours. And then there are others where those sectors were already on the decline, and COVID, if anything, just accelerated that decline. So in terms of sectors that we're seeing, I mean, if you look broadly, there's very big shifts that are happening at platform levels and consumer behavior, as have already been pointed out by some of the panelists. But when we think about areas where companies have been thriving, you think of sectors like healthcare, where there's been acceleration in technology and different forms of patient-doctor interaction. Certainly a lot on the consumer side in terms of health and wellness, virtual provider, remote monitoring, all of those areas. And we've seen this in our own portfolio companies have been doing very well. The demand has just, skyrocketed in a very short period of time. Education is another sector where we're seeing a lot of shifts. In some ways, you might see that as a decline in certain parts of education, but certainly as it relates to technology for institutions or higher education in terms of just content and being able to get that professional education, we've seen a lot of success with our portfolio companies, both in terms of adoption as well as being able to raise, because there's a lot of unemployment, particularly in the US, and a lot of demand to up-level their skills. And then at the same time, areas where we've seen the headwinds, again, sectors that are already, we're already seeing some decline, and COVID really just accelerated that. Areas like retail, hospitality, travel. These are all areas where we feel like the industry that we knew is going to change very massively. Like these will come back, but in a new normal, one that we wouldn't have. There's really no going back to kind of a pre-COVID existence, because things have fundamentally changed in terms of how people travel, the need to travel both for business and consumer, and then retail as well. There's a lot of very fundamental changes happening there, and so it'll be interesting to see. Now that we've been, a year into this and looking into 2021 and beyond, especially when we are now seeing the vaccines come in and seeing how that's going to change for 2021, definitely be exciting times for, at least from a venture perspective, in terms of knowing that some amazing companies are going to be coming out of this vintage these couple of years.
Yeah, Jack, Christine's obviously mentioned the winners and losers in terms of growth. But what does that mean for the future? Where do leading VC firms and investors see the greatest opportunities for growth over the next 5 years? What happens to those sectors that aren't considered to be investable at the moment? What are we looking at?
So from our perspective, we actually look at it currently above a sector level point of view. So one of our theories that we have that's going on, and this is more of a domestic US theory, is that there is an unwind that's going on in terms of an exodus from Silicon Valley. And people have been talking about it internally in California for a long time, and it's finally starting to get some press attention. But I honestly think, to use a US baseball analogy, it's the top of the first inning. And you're starting to read stories about companies leaving Silicon Valley. You start reading stories about venture capitalists leaving. But I think it's actually going to have a profound impact on how tech is going to look over this next decade. So I think it's going to democratize tech across the entire country. And I don't think it's just going to be Austin or some of these other cities that are mentioned. I think it's going to be across the board. And I also think it has the potential to spurn a greater migration from states that have been very anti-business during the pandemic. So for example, California has been very onerous with respect to small to medium-sized business. So I think tech is going to innovate in a way of showing that capital, human capital in particular, is mobile. And I think you're going to see businesses, not just tech businesses, there's going to be a migration that is going to rival potentially kind of the settling of the great American West, where people are going to leave these very kind of anti-business states because there's so much pent-up angst from the pandemic and how poorly some of these states have managed the COVID situation. So people are going to be leaving California in droves, Illinois in droves, New York in droves. And what are going to be the ramifications for tech domestically? That's really what we're trying to figure out. And then on top of all of that, you have remote work, remote school. So I think you add up all these ingredients and you have a confluence of factors where you're just going to have a lot of migration going on for quite some time.
Yeah, so Christine, if we're talking about migration that Jack's been talking about, we're talking about innovative and new ways of thinking, which obviously is a consideration for startups. Can we just focus specifically and very quickly on ECG? Can you explain why this should be seen as an opportunity for integration at the early stages, and how important it is for those socially conscious investors to screen potential investments?
So ESGs, it's for those in the audience, environmental social governance. It is a set of standards that a number of either corporations or investors adopt more along the lines of responsible investing, responsible operating. And I think with COVID and certainly here in the US, there's been numerous events around racial injustice. A lot of this has really just shown a light on what already exists in society in terms of disparities, lack of diversity, climate change. All of these things were all issues that are not new. But if anything, again, 2020 just really shined a very bright light on what is going on and highlighted just how how much of a disparity there is in many different areas. So, our bet is that this has really highlighted the increasing importance that ESG can play in both holding investors accountable, but also companies accountable in terms of sustainable operations and investing. And so we actually believe that despite the perception that ESG is something that is primarily for very large companies later stage, we actually believe that applying that at the early stages when a company is very formative and can make those changes, it potentially will help mitigate risks on a number of fronts as the companies grow. And so that's why we've adopted ESG in terms of our investments and eventually the broader firm to help both ourselves as a firm set that example, but also for our early stage startups to apply those policies when it's actually easier to do.
Okay, Christine, what I'm going to do, because we're so short on time, I just want a final thought from each one of you. Rajeev, just very quickly, what are your final thoughts about the future for VC investment?
The future is very simple. In 10 seconds, with the availability of data, AI and digital disruption will accelerate even faster and go after all those, and it'll be industry agnostic. It'll go after all those companies in different industries that are inefficiently run and be replaced by these new startups that will run it more efficiently.
Okay, Jack, sorry.
The tech cycle in the US will not be checked by market forces like it has been in the past. It's going to be checked by these migration forces that are taking place currently, as I mentioned earlier.
Christine, 5 seconds.
Oh, as I was saying earlier, I think the trend will get towards more responsible, sustainable investing as a mainstream and as a table stakes.
And Patrick, you have the final word on this.
I think that digital technology, data is the new field. And really, for the next 10 years, we're going to see tremendous amount of efficiency. And the large and small companies are able to unleash as they adopt and technology, and especially data-driven technologies.
Well, that concludes our session on investing in tech. How will venture capital drive the next wave of innovation and entrepreneurship? Thank you to all my panelists, absolutely brilliant. Rajeev Misra, CEO, SoftBank Investment Advisors UK. Jack Selby, Managing Director, Thiel Capital. Christine Tsai, CEO, 500 Startups. And Patrick Zhong, Founding Manager, Partner, M31 Capital. You can, of course, watch all our sessions online. Please take the time and have a look. I've been your moderator, Nadira Tudor, and it's been an absolute pleasure to be here.
Thank you.
Thank you.